Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So this is the third video on problems of cash flow statement. Last two videos I have explained you 4 problems on cash flow statement. Now in this video, 5th and 6th, these 2 problems I am going to explain you. So before these 3 videos I have uploaded on explanation about what is the meaning of the term cash flow statement, what is the need, importance, differences between cash flow statement and funds flow statement, and how to prepare the cash flow statement as per AS3. What is operating activity, what is investing activity, what is financing activity. All these things I have already uploaded. So if you are interested in getting a good command on this topic, watch all the videos. Don't join in between. So if you have not watched the earlier videos, I suggest you go to the playlist of my channel, select the subject accounting for management, select the videos of cash flow statement analysis. Watch all the videos, be perfect, be confident to write in examination. So before starting the 5th problem, I expect my viewers to have a printout of the problems, which I have given in the link under my description. Always keep it ready. Take the screenshot of the solution of this 5th and 6th problem, then I'll explain all the points in detail. Now, see the 5th problem. Problem number 5. From the following information, prepare a cash flow statement. So here balance sheet is given 2 years, 2018 and 2019, liabilities, assets. And some additional information is given. During the year 2019, depreciation written off on machinery and furniture was 1 lakh rupees depreciation on machinery and 1,50,000 is the depreciation on furniture. Now see the balance sheet liability side. Capital, last year 15 lakh, current year 16 lakh. So during the current year 1 lakh rupees share capital increased, that is issue of shares, and that will come under financing activity. So you can see here cash flow from financing activity, issue of shares 1 lakh. The only thing you have to remember, all the items will come either in operating activity or investing activity or financing activity. Next comes reserves. Actually, profit and loss account or reserves. The profit earned by the company will be kept either in profit and loss account or in reserves. In our current problem, we don't have any profit and loss account given. Reserves are given. So whatever profit is there, that is taken in reserves. So we find out cash flow from operating activity by using reserves. So last year reserves 1 lakh, current year 1,20,000. So 20,000 rupees reserves increased during the year. So that is a starting point in operating activity. Cash flow from operating activity increase in reserves. 1,20,000 minus 1 lakh, it comes to 20,000. Remember, whenever you are watching the video, I suggest you keep a notebook beside you, pen as well as calculator. Whatever I am explaining, immediately you write it down. Then only you can be able to remember. You can understand. Now, this is the increase in reserves. Next one is debentures. Debenture is the loan taken from the public. Last year debenture 4 lakh. Current year debenture 2,80,000. So debentures are reduced, decreased. That means during the current year, the company has redeemed the debentures. A redemption of debentures means returning back the amount to the debenture holders. So how much decreased? 4 lakh minus 2,80,000, 1,20,000 rupees debentures have been decreased. That is called redemption of debentures. That will be taken under financing activity. So redemption of debentures 1,20,000. This is cash outflow. That's why I'm putting it in bracket. Inflows without bracket, outflows in bracket. So here redemption of debentures, money is going out. So 1,20,000 minus. Then bank loan. Bank loan last year 1 lakh and current year nil. That means the loan of last year was paid off during current year. So loan, repayment of loan, that will again be taken under financing activity. So under financing activity, repayment of bank loan 1 lakh, again in bracket, because there is cash outflow. Then current liability again will be taken in operating activity, adjustment of working capital changes. Then provision for tax, nothing is given in adjustment regarding tax, so we are not preparing the provision for tax account. In the previous video I told you, if something is given in adjustment regarding tax paid or provision made during the year, in that case it is better to make provision for taxation account. But here no adjustment is given. So what we assume, last year's provision for tax 50,000 is paid off during the current year, and current year provision of tax 1,40,000 is the provision made during the year. On that assumption, the provision for tax made during the year 1,40,000, that will be taken under non-cash. So here you can see provision for tax made during the year 1,40,000. So current year's provision for tax here, and income tax paid, I'll put a tick whichever item we have already taken. 20,000 is the increase in reserves. Then provision for taxation made during the year 1,40,000. Current year provision. Last year's provision for tax, that is assumed as paid during the current year. This income tax paid will be deducted from operating profit. So here operating profit before tax, from this less income tax 50,000. This is last year 2018, 50,000, right? Next, proposed dividend. Provision for dividend or proposed dividend means same. Again, nothing is given in adjustment. So our assumption is last year's provision for dividend is paid during the current year, and current year's provision for dividend, it's a non-cash item. So current year's provision for taxation should be taken under non-cash, that is 20,000. So provision for taxation, proposed dividend made during the current year, 20,000. And last year's dividend paid, provision for dividend last year is the dividend paid, and dividend paid will be taken under financing activity. So here financing activities are there, dividend paid 20,000 I have taken. Next, come to asset side. Asset side, first item, goodwill. Goodwill last year 4 lakh, current year 3 lakh. Goodwill decreased by 1 lakh. When goodwill is decreased, it means during the current year goodwill written off. In profit and loss account we have debited goodwill. That means goodwill written off during the current year 1 lakh, and that is a non-cash item. That will be taken under non-cash in operating activity. Here goodwill written off 1 lakh. Next comes machinery. Machinery last year 10 lakh, current year 11 lakh, and during the year machinery depreciation was 1 lakh. So depreciation is given in adjustment. So we will make the account. Which account? Machinery account. So here you can see machinery account. Last year balance 10 lakh. So to balance brought down 10 lakh. And current year's balance is 11 lakh. Opening balance will be taken on debit side. Closing balance will be taken on the credit side. 11 lakh credit side. And depreciation provided during the year. Last line it is given 1 lakh. Depreciation I have taken credit side. Now we'll find out what is a balancing figure. Credit side it is more. 11 plus 1, 12 lakh is the total on the credit side. Same 12 lakh take it on the debit side. So 12 lakh minus 10 lakh. Balancing figure is 2 lakh. This 2 lakh rupees represents purchase of machinery during the year. We are getting balancing figure on debit side. That means during the current year, further machinery are purchased for rupees 2 lakh to bank. Purchase balancing figure. Now where we should take these items? The depreciation 1 lakh should be taken under non-cash. The depreciation on machinery 1 lakh will be taken as non-cash. And purchase of machinery 2 lakh, it will come under investing activity. When we purchase the fixed asset, It's an investing activity. So cash flow from investing, this is cash flow from investing activity. Purchase of machinery 2 lakh in bracket. When we purchase the machinery, there is cash outflow. Money is going out. That's why in bracket. So machinery or now furniture. Same way, furniture last year 4 lakh, current year 6 lakh. And during the year furniture depreciation 1,50,000, last line it is given. So we make the account, furniture account. Opening balance to balance brought down 4 lakh, just like machinery. And closing balance, by balance brought down, carried down. By balance carried down 6 lakh. So this is the opening balance brought down and this is the closing balance carried down. Depreciation provided during the year 1,50,000. So here credit side by depreciation 1,50,000. Now take the total on the credit side. 6 lakh plus 150, 7,50,000 is the total on the credit side. Same total you take 7,50,000 minus 4 lakh. The balancing figure is 3,50,000. This 3,50,000 represents furniture purchased during the year. So to bank purchase balancing figure 3,50,000. Now how to treat this depreciation 1,50,000 is a non-cash item. So here depreciation on furniture 1,50,000 and the purchase of furniture 3,50,000 that will be taken under investing activity. So investing activity purchase of furniture 3,50,000 again in bracket because when we purchase something cash is going out. Or the furniture or then stock. Stock is a current asset. Debtor is a current asset. Then cash, opening and closing cash will be taken last item, cash and cash equivalent. Preliminary expenses, fictitious asset. These preliminary expenses are fictitious or imaginary asset. The last year preliminary expenses 20,000, current year nil. That means during the current year preliminary expenses are written off by charging to profit and loss account. So it's a non-cash item. Writing off of preliminary expenses is a non-cash item. The preliminary expenses written off during the year 20,000. So all the items I have taken except current assets and current liabilities that I'll show you. So increase in reserves, all these things we have added. All the items we have added, we got 5,50,000. This 5,50,000 is the cash profit before working capital changes or operating profit. Operating profit before working capital changes. To this we have to make the adjustment for working capital changes. Working capital consists of current assets and current liability. Previous video I told you the rule. Increase in current liability, decrease in current asset should be added. The opposite will be deducted. So what are the items to be added? Increase in current liability, decrease in current asset. Now individually we will see. Liability side, current liability last year 50, current year 60. So increase in current liability will be added. So here adjustment for working capital changes, increase in current liability added. So how much is the difference here? Current liability difference is 10,000, 50 to 60. So 10,000 rupees should be added. Only one current liability. Now come to current assets. Stock. Stock is a current asset. Last year 3 lakh, current year 1 lakh. Decrease in stock or decrease in current asset should be added. Increase in current liability, decrease in current asset should be added. So here decrease in stock, add 2 lakh. The difference is 2 lakh. 3 lakh minus 1 lakh. Debtors. Debtor is a current asset. This is a trade receivable. So debtors last year 50,000, current year 1 lakh. Increase in current asset, that should be deducted. Decrease raha to add, increase should be deducted. So increase in debtors minus 50,000. Then after debtors, cash, over, finished. All current asset, current liability we have taken. So 5,50,000 plus 10,000 plus 2 lakh minus 50,000. You will get 7,10,000. This 7,10,000 is called cash flow, cash operating profit. Operating profit before tax. Operating profit before tax. From this we deduct the income tax. See the provision for taxation of last year. Provision for tax last year 50,000 was there. So our assumption, last year provision for tax is paid during the current year. And current year provision for tax will be paid in the next year. That is our assumption. So last year tax 50,000, deduct income tax paid 2018 50,000. You deduct this 50,000. Then 7,10,000 minus 50,000, 6,60,000. This is the cash generated because positive. 6,60,000 is positive. So cash generated in operating activities. First item over. Now come to second item, cash flow from investing activity. Already we have decided two fixed assets are purchased. Machinery purchased and furniture purchased. Already we have taken purchase of machinery 2 lakh, purchase of furniture 3,50,000. Total 5,50,000 in bracket. Both are minus. That means this is the cash used in investing activity. It is not generated. Positive generated, negative used. Last one, cash flow from financing activity. In this financing activity, share capital. Last year and current year, there is increase in share capital. So issue of shares. Share capital increased, issue. Then redemption of debentures. If you compare the debentures of last year and current year, last year 4 lakh, current year 2,80,000. The 1,20,000 debentures decreased. The redemption of debentures. The redemption of debentures 1,20,000 bracket. Cash is going out. Similarly, loan. Bank loan last year 1 lakh, current year nil. Repayment of bank loan. The company has returned back the bank loan. Repayment of bank loan 1 lakh. Again bracket. Dividend paid. Last year's proposed dividend is paid during the current year. 20,000. It's a payment, so bracket. So 1 lakh minus 1,20,000 minus 1 lakh minus 20,000. You are getting minus 1,40,000. Negative you are getting. So cash used in financing activity. Cash used in financing activity. All the three we have 6,60,000 minus 5,50,000 minus 1,40,000. Ultimately minus 30,000. This is called net decrease in cash and cash equivalent during the year. Net decrease in cash and cash equivalent during the year 30,000. Now there is no space there, that's why I am continuing here. Net decrease in cash and cash equivalent minus 30,000 I have taken. Now we take the cash and cash equivalent at the beginning of the year. So in the problem you can see last year cash 50,000. In the problem it is given cash last year 50,000. So cash and cash equivalent at the beginning of the year 50,000. Now plus 50,000 minus 30,000. So 50,000 minus 30,000 you will get 20,000. This is the cash and cash equivalent at the end of the year 2019. We have completed. Now we want to confirm whether our calculations are correct or not. Now see the problem. In the problem cash current year 20,000 given. Current year cash is 20,000 and we also got 20,000. That means our calculations are correct. This is the end of problem number 5. Cash flow statement. One more problem I'll explain in this video. From the following calculate, 6th problem. From the following calculate cash from operating activities during the year 2019. In this problem we are not required to make cash flow statement. We are required to make only, we have to calculate only cash from operating activities, this one. Actually, how to calculate cash flow from operating activities, current year's profit. To this we adjust non-cash, non-operating items. To this we adjust working capital changes. So two things you have to adjust, non-cash, non-operating items and adjustment of working capital changes. Then we'll get cash flow from operating activity. In our problem, 6th problem, we are given 31st December 2018, 2019, last year and current year. Last year 2018, current year 2019. Now debtor is a current asset. Bills receivable, current asset. Creditor, current liability. bills payable, current liability, outstanding expenses, current liability, prepaid expenses, current asset, accrued income means income receivable, it's an asset, income received in advance, that's a liability, current liability, profit made during the year 13 lakh. So in this problem, the profit made is given 13 lakh. So calculation of cash from operating activity, profit made during the year 13 lakh I have taken. Now, we are not given any non-cash, non-operating items. We are not given anything. We are given only current assets and current liabilities. So only working capital changes we have to adjust, right? First one, debtor. Debtor is a current asset. Last year 5 lakh, current year 4,70,000. The decrease in debtors, decrease in current assets should be added. So here decrease in debtors, add 30,000. Difference you take last year and current year. Secondly, bills receivable. Last year 1 lakh, current year 1,25,000. Increase in bills receivable, increase in current asset, deduct, minus. So increase in bills receivable minus 25,000. Next comes creditor, is a current liability. Last year 2 lakh, current year 250. Increase in current liability, that should be added. So increase in creditors, added 50,000. Next comes bills payable, that is a current liability. Last year 80,000, current year 60,000. Decrease in bills payable should be deducted. So decrease in bills payable, deduct, minus. Then outstanding expenses is a current liability. So last year 10, current year 12. Increase in outstanding expenses, that should be added. So increase in outstanding expenses, added. Next comes prepaid expenses. It's a current asset. So last year 8,000, current year 7,000. So decrease in prepaid expenses, added. So decrease in prepaid expenses, added. Next one, accrued income. It's a current asset. Income receivable, current asset. Last year 6,000, current year 7,500. So current asset increased, deduct, subtract. Increase in accrued income, minus 1,500. Last one, income received in advance, that's a current liability. So last year 3,000, current year 2,500. So decrease in current liability should be deducted. So decrease in income received in advance, minus 500. That's all. Whichever is minus, we are putting in bracket. Bracket denotes subtraction. Without bracket denotes addition. So 13 lakh plus 30,000 minus 25,000 plus 50,000 minus 20,000 plus 2,000 plus 1,000 minus 1,500 minus 500. You will get 13,36,000. This is the cash flow from operating activity. That's so in this video, 2 problems I have completed, that is 5th and 6th. So if you are satisfied with my lecture, give a like to the video, share my channel among your groups, among your friends, so that more students can watch the video. Subscribe if you have not yet subscribed. And by the super thanks which is given below my video, inshallah we'll continue the next problem in the next video.